Bloomberg Audio Studios. Podcasts, radio, news. This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Massar. I am Tim Stenovec. And we're going to get back to talking about markets. It's enough sharks for you, Carol.
Are there sharks in the market?
Depends on how you define
Finding
it.
deals?
Yeah, I think there are. The S&P 500 closed higher today by 0.5 percentage point. The NASDAQ by 1.2%. The Dow fell by 0.2%. So on a whole, many equities did advance after that sell-off, put the S&P 500 on the verge of a technical correction. The bounce today led by tech mega caps. It got heavily hit during the market downturn. Anxiety around the impacts of President Trump's policies continued to influence sentiment. The U.S. equity benchmark briefly fell earlier in the session as Canada unveiled new tariffs against $21 billion of U.S. goods. Needless to say, things are kind of all over the place right now.
Yeah, a fair amount of volatility, although the VIX definitely did back off today. Let's get to it with Carol Schleif, Chief Market Strategist at BMO Family Office, joining us from Madison, Wisconsin. Minneapolis. You're in Minneapolis? You are in Madison.
Actually, today I'm in Madison, Wisconsin. We're doing a Women in Wealth event here this evening. So,
lovely.
Normally I'm based in Minneapolis.
Okay. Good to have you here. Hard to keep track of everything, but I feel like things calm down a little bit. I'm curious, Carol, how you see the market environment. What do you think should be top of mind for investors with a lot of headlines coming from Washington, getting ready for a Fed meeting next week, and, continuing to parse through the economic data like we did this morning's inflation report?
It's definitely been a very difficult market to keep your head wrapped around. And the weekly piece that we write last week, we titled it Breathe. I mean, it was simple. We just wanted everybody to make sure that they were taking a step back, looking at things, because there have been a ton of policy pivots that have been thrown at us in very short order. And while none of them should have been a surprise, I think the fact that they were all addressed at the same time with multiple policy levers has everybody taking a step back, trying to figure out what's what. And so in that sort of environment, when you've got potential long-term pluses, the near-term negatives, because it's really important to remember that in Trump 1.0, we had the tax cuts first and then the tariffs, and markets did well when we had tax cuts and they suffered when we had tariffs. And we've got the mirror opposite of that this time around, where you've got all of the tariff in bigger increments, more amounts, and in ping-ponging so many ways back and forth. All you can do is step back and rubberneck it.
Yeah, I mean, that's what a lot of people have been doing, but they've also been watching the value of their portfolios go down also in recent days. Carol, if you talk about these two sort of big things that the Trump administration has coming, one of them is tax cuts, the other is tariffs that have not yet been implemented. Which one has a bigger effect on the U.S. market?
In the short run in the market, it's hard to figure it out. And the key is how soon do we get policy? We need to rip that Band-Aid off, get the policy set, and then businesses can adjust. Because it's important to remember we've been dealing with some form of tariff since 2018. The companies have. But, I was in an event a couple of weeks ago, Women in Manufacturing, their senior leadership event, and talking to these women in the manufacturing industry, asking them how their companies were adjusting. And it's really tough to scenario plan when the things change day to day. So the sooner we can have some clarity, the sooner they know what the ground rules are. It's like you showed up at the field and they decided we're playing football today instead of baseball. You need to know what equipment to bring and how to deal with it. And so once we get some clarity, but markets in the short run are really dealing with those policy pivots and some of the geopolitical pivots too that have happened.
Well, I want to go, Carol, what you said too earlier about it's opposite where President Trump did tax cuts first and then tariffs. And now we're seeing tariffs. And our Gina Martin Adams has brought this to our attention too, that we're kind of getting the rough stuff first. But does it matter what comes first and what comes second in terms of what matters to the markets and what is lasting on the markets? And the economy for that matter too.
Yeah, it does better from the economy standpoint because it's really important to think through. It took us a long time to get to the structure our economy is now. And in aggregate, Americans have benefited from globalization in that we have more goods. We're 70% consumption society when we were 50 or 60% back in the 80s and 90s. And it's devastated the middle class. And if we want to change that and rebuild that infrastructure, it is going to take time. It's not going to happen seamlessly, and it's going to be rocky to get there. And we collectively are going to have to decide that we're going to buy a little less, pay a little more, but rebuild our middle class. That takes some time to get there. And the interesting thing is once the policy's set, companies will be able to do it because we have an environment here that is very conducive to doing business. You've also got a whole bunch of pent up M&A activity. You've got expansion activity that wants to happen, but it can't happen until there's some sort of policy clarity out there. The other impact of this too is to the effect that growth slows for a bit in the interim. If we bring those interest rates down, particularly the 10-year rates down, you have a chance to take some of the pressure off the housing market and hopefully get some things moving there too. So the hardest part for markets, our markets want to, while they say they're discounting mechanisms and want to look forward, when there's a whole bunch, that worry closet is open, the concern is end of day.
Carol, it's politicians say a lot. And what they end up enacting is a lot different in many cases than what they talk about on the campaign trail. But it does sound like you think that President Trump will be successful in his attempt to rebuild the middle class here in the U.S. That's what it sounds like I'm hearing from you.
I think the potential is there. It depends on how we execute, because the other factor that's going on here is not just, you can't just build the plants, and it depends on how you encourage that infrastructure. We have to create an environment, in my mind, we have to create an environment that invites people to want to do business here, not beats them up to do business here. And we also have to make sure that we have the intellectual capital to do it. And so we have to be a little more careful, I think, about some of the DOGE cuts that are coming down, because we're devastating ranks of scientific exploration, lots of different things that are going on there. And you run the risk of doing almost irreparable harm there. So I think the execution is going to be critical to watch and how we do it. I have full faith in our companies to execute through. I think the broader issue is, can we put the infrastructure around them?
All right, we've got to run. Carol, thank you so much. Carol Schleif, Chief Market Strategist at BMO Family Office, joining us. All right, top of mind for us right now, we want to talk a little bit about what's going on when it comes to the VC environment, and in particular, when it comes to women-led businesses. Last year, companies that were founded by women and did not have a male co-founder received only 1% of all venture capital funding. This is according to PitchBook data cited earlier this month, and this is what they do. They keep track of all this stuff.
Yeah, I read about this in Inc., and that report in Inc. also noted that angel investing in female-founded companies decreased last year. So it wasn't just venture capital, it was also angel funding. And you got to wonder, what's the path forward?
Right, which is the early stage funding. All right, so we're curious to see what Ann Corkran has to say. She's co-CEO and managing partner at Golden Seeds. Golden Seeds, by the way, has invested over $188 million in 260 women-led companies that have then eventually gone on to raise over $2.2 billion. She joins us from New York. Back with us. It's been about a year or so, I think. Joanne, how are you?
I'm great. Thank you, Carol. I appreciate being invited back.
Well, it's nice to have you back with Tim and me. It seems like the numbers, as Tim mentioned, when it comes to angel investing, which is really important, right? That's the early stage, really, really early stage, was down last year. And even if we look at, all VC funding, the numbers are still so low. First of all, big picture, why is it still so difficult? Is it that there aren't the women-led businesses to invest in, or is it just not the capital with interest in investing in what's out there?
Well, there's really a dichotomy between VC and angel capital. So let's start with angel capital. Directionally, it's been pretty good for the last 10 or 15 years in the angel markets. And you can stop me if I need to talk about the scope of the angel market. But so more than 30% of capital went to women founders, almost 40% to gender diverse founders. That's up from 3 to 5% 20 years ago. More importantly, in the angel markets, the yield, that's the percentage of companies that are seeking funding that get funding. That's now pretty comparable between all male teams and female and gender mixed teams. So something like 25%.
That I saw that in the pitch book report. So basically if there's like a man on the team, you're, so much more likely to get that funding.
Well, it could be that, but here's the other thing is most teams, the way people work these days is it's diverse. There's men and women on a team. So when you start looking at only female teams, you're really sort of shrinking the universe. So I wouldn't do that. Why is it better in angel land? Well, the reason I believe it's better in angel land because the people who are making the decision about where to put the money are themselves more diverse. Okay. There's different studies that say that, there's something like 400,000 people in the US who are angel investors, people who are investing directly in startup companies. And over the last, 20 years, that's gone from 5% women to over 35% women. So diverse people making the decisions also tends to generate diversity in how the money is put out. And, even the venture markets are slower to evolve, don't get me wrong, but there's bad news there. That all female team number is awful, actually went down last year. And even the mixed team number, if you take out OpenAI, that went down a little bit, but it's still something like, 26, 28%. And that's well up from the 7% that it was in 2008. So yeah, there's work to do there. Don't get me wrong.
Right.
But it's not as bleak as the headlines.
Why?
Okay.
All right. So give us the green shoots, the optimism, the silver lining, because it felt pretty much like a bummer there.
I know. I mean, I had so many people calling me with this. Women only got 2% of funding, but it's not quite that bad. So can we just talk a little bit about what's happening so far in 2025?
Yeah, let's do it.
Okay. So we had the crazy run up in 21 and 22, and then a little bit of a crash, over exuberance, I would say, coming out of the market. 24 was a tiny bit better than 23, still a long way from the numbers we saw in the run up, but a little bit better. And 25 really started out pretty strong. In fact, at Golden Seeds, and we're a pretty good measure, Carol and Tim, because we are one of the largest and most active groups in the US. So we're probably typical about what's going on. Our investors, just in January and February, they invested 40% the amount of dollars that they invested in all of 2024. And so, why was that? Well, the economy and public markets up until the last couple of weeks looked pretty strong. M&A, although still quite low, did pick up a little bit in 2024. And as you guys know, there were lots of stories in the financial press predicting a reopening in the IPO markets. Investment terms at our stage of the market are incredibly favorable to investors, not just valuations.
Right.
But also protective provisions and governance are really great. And at Golden Seeds, we started to see the market really loosen up because we already had 2 liquidity events in January and February. And they were pretty big. They returned more than 15% of all the investments that Golden Seeds has made since the group started.
Wow.
So
do you think that's
pretty great?
You mentioned, everybody thinks, well, I don't want to say everybody, but as you alluded to, many people thought there would be deal activity, IPOs, M&A happening this year. Do you think that's actually going to happen? And do you think that, what are your thoughts about the investment environment for seed investing and for startups during this administration?
Okay, so obviously the last few weeks have raised some concerns, not just, about, talk at the edges about recession and public markets declining a little bit. But another thing that's happened is this sort of a concern about what's happening with government budgets and what's happening with grant funding, because so many early stage companies are dependent on, they'll pick an industry that they're working on. And now suddenly, if you start changing the budgets in that industry, sort of, an deus ex machina, then they're going to have to pivot and rethink just what they can do. So I think there's a little bit of uncertainty that's injected there, and we're going to have to follow it carefully to see what happens. But as I said, at the front end of the market, we don't have the problem that late stage VC does. Late stage VC's got so much stuff on the balance sheets, it has to work through. We don't have that.
Oh, that's good. That's some optimism, certainly.
Yeah.
Joanne, thank you so much. Really appreciate it. Ann Corkran, she's co-CEO and managing partner at Golden Seeds. As we mentioned, they've invested over $188 million in 260 women-led companies, and then have ultimately gone on to raise over $2.2 billion off of that.